Welcome back to the show where we talk about real estate investing and how you can make better decisions as a passive investor, or even just get into real estate or investing in general, and how you can start your journey today. What you need to do, actionable steps to do so. Now today, it's going to be a little drier. It's going to be a little nit and gritty. It's going to talk a lot about, maybe not a lot, but just a quick overview of how to raise capital and some proper ways to do so. Now, I want to throw out a disclaimer. We're not professionals. Please advise with an accountant and a lawyer, attorney, to make sure you're drafting your paperwork correctly. Do your own research on the SEC's website. That's where we get a lot of this information, including some books and stuff that we'll reference later on in the podcast, and we'll put it in the show notes as to where you can find this information. Do your own research. Disclaimer, we are not professionals. Don't take our word for it. Don't take anyone's word for it. Do your own research. It's serious stuff when dealing with other people's cash. Now, let's get into it. So what are we going to be talking about today?
So we are going to be talking about 506B and 506C. So Luke, you're going to have to educate me on this category because I don't know much either. I'll try to ask you some questions about it. But I guess just give us, maybe define some terms that we'll be talking about.
Well, I guess really before we get into all of that, everybody needs to know like the terms that you're talking about, right? So there's a couple of things that we're going to reference that you really should understand to kind of help with the conversation, right? Like, what is an accredited investor? An accredited investor is someone who has a net worth of at least $1 million or has made $200,000 in the previous 2 years and is able to like prove that and show that in some way, shape, or form. And a non-accredited investor is someone who is, doesn't meet those requirements, makes less than that, has a lower net worth, and is probably not as involved in the investing world as the accredited investor because they got a little bit more going on. What else?
Okay. I guess we need to touch on securities since that is also what we're going to be.
Yeah, so there's another term that we're going to be using. Securities, they're really similar to like bonds and stocks, right? It's like an object that you're going to purchase to kind of describe what your equity stake in said property or investment that you're making, and it's going to lay out all the terms involved in that transaction and what's going to happen. And then I guess the big thing that we're going to be talking about is the private placement exemptions and what those are. So what the private placement does is it prevents you from having to register with the SEC, the Securities and Exchange Commission, right? And what they do is regulate all of investments and cash flow and raising capital, and they make sure that everyone's following guidelines to stay in line and not rip people off and scam people out of their money, right? And so all it is an exemption from having to register with them. Why the heck don't you want to register with them? Well, there's tons of fees, and it's a lot involved, and it's going to cost you quadruple the amount of money, and there's way more guidelines and rules that you're going to have to follow. That just makes things way too complicated when you're just trying to raise capital for a real estate purchase, right? It's a simple transaction. There's not a ton of moving parts, so they've made these exemptions that you can file, the 506B and the 506C, to get the job done in an easier fashion, to make it easier and simpler for everybody involved, the passive investors and the active investors in the deal.
Okay, so let's break down what each of those are and the differences between the two.
So how I remember what a 506B is I look at the B, it stands for both. What does that mean? Is that you can raise capital from both types of people. Remember that term, accredited investors, we used earlier? You can raise money from non-accredited and accredited investors, right? And that's where I start with my recognition, how I keep track of them, right? 506B, you can raise money from both. Now, being able to raise money from non-accredited investors leaves you with some restrictions. You're not allowed to advertise it on the public market. Why can't you do that? Because the SEC wants to see you have a pre-established relationship with a non-accredited investor when they are investing with you. that protects you and that protects them, right? How does it protect them? Well, if you have a pre-established relationship, you're less likely to screw them over, and you have some sort of a relationship with them to like trust you, and everyone kind of knows what's going on, right? And how does it help protect you? The farther that you kind of get away outside of your close network, the more likely that someone is actually going to pursue you in a legal fashion if something doesn't necessarily rub them the right way, right? Maybe they get upset over something silly that, was laid out. They might try to come after you in legal pursuit, right? And no one needs to do that unnecessarily, right? There's, of course, times and place where that should definitely happen and that's necessary. But, staying in your close circle is always a little bit easier in some cases, right? You know how they say don't work with your friends and family, but we won't look at that.
Okay, so in a 506B, you can sell securities to both accredited and non-accredited investors, but you cannot solicit or advertise to anyone and everyone about these securities that you're selling.
And the cool thing about these is there's no limit to how much money you can raise, and there's no minimums to how much money you have to raise, right? Okay. So I think that's pretty cool because it's almost like there's not a cap to it, right? They don't put that cap on you. Other than there is a cap on the non-accredited investors. You can only raise capital from 35 non-accredited investors before they're like, okay, nope, no more. I don't necessarily know why that is. I would assume that that's to kind of, again, protect the non-accredited investors so you're not crowdfunding from people that don't know what they're doing.
Gotcha. So the amount of money that you can raise is unlimited, but from non-accredited investors, you can only sell securities to 35 non-accredited investors.
Yep. Okay. It just, taking out the securities thing, I would just look at it like you can only work with 35 non-accredited investors, right? If they're accredited, making $200,000 a year or $1 million in net worth, or a couple that makes $300,000 a year, you can work with as many of them as you want, and there's no minimums again. Okay,
so then what's the difference between 506B and then 506C?
Yeah, so actually the 506B was the only one that was around for a long time. It was the only exemption from actually filing with the SEC. And then the 506C came along, and people were like, whoa, what's this new thing? I can now advertise my offerings, right? Now you can actually go public with your offerings and say, hey, I have this amazing opportunity. Who wants to invest, right? You can put it on your podcast, whatever. You can talk about it to whoever, whenever you want. Just the one caveat is you're only allowed to bring on accredited investors to the table, right? And some people didn't like this when it came out because they were like, why would I shrink my investor pool to only accredited investors? But the cool thing about that is a lot of times you're going to have the most problems from non-accredited investors because they're not familiar with what's going on. They're not comfortable with making these types of investments. And long story short, you want to make sure that people know what's going on, and you want to make sure that people are comfortable investing with you in whatever asset that you're buying, right? So that way they trust in you, and they're not totally, breathing down your neck every second, every step of the way of like, when am I going to get my money? What's going on? Blah, 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 right? Like, nobody wants that, and that makes things stressful, and it can hurt the deal in a way, right? But yeah, so the 506C came around, and they were like, you can now advertise, but you can only raise money from accredited investors. And again, just like the 506B, there's no cap to what you can do. There's no limit or requirements as far as how much or how little money you have to raise.
Got it. So really the only difference between the two comes with which type of investor you can have participate, and then also the advertising. Those are the two differences.
Yeah, so there is actually one more stipulation in the 506C. With the accredited investors in that strict requirement, you have to go through a process with your investors to verify that they are actually accredited. How do you do that? There's some third-party stuff out there that can help you with that process and has streamlined it. I got this information from Raising Capital for Real Estate by Hunter Thompson. It's a great book. I would go read it if you're a passive investor looking to raise capital. I think it would be a great resource for you. But when I got this little nugget from that book when this first came out, it was kind of hard, and it was a whole nother process to get your investors to become approved, right? There was a whole nother step they had to go through, and it wasn't something they were used to, submitting like financial documents to places to kind of prove their quality, right? And that was a hard pill for some people to swallow, and it kind of shrank their pool of, investors even smaller. But as time went by, more and more people started doing it, and once someone does it once, they kind of have a knowledge of how to do it and are used to the process. And as time's gone by, this process has become streamlined, and there's a couple of websites I wrote down that help with this process. One's verifyinvestor.com and the other one's fundamerica.com. I would check them out if you're looking to prove that you're an accredited investor. It could really help. But yeah,
we'll put those links below in the description as well.
We'll put it all below, links to the book and SEC's website, so you all can do your own research, because ultimately this is just a tool for just opening your eyes to what's out there and where you can get some information. Just a quick overview of what I've personally learned and my opinions on these topics, right? It's not law what I'm saying. Please do your own research. Make sure you look into it for yourself. So that was a little bit about the private placement exemptions that are out there to help prevent you from having to file with the SEC and go through all of that headache. So a couple of those, a little recap, was the 506B. B stands for both. You can raise money from non-accredited and accredited investors, but you cannot advertise. And the 506C is you can advertise all you want. You can open it up to the public market more or less, but you cannot raise capital from anybody other than accredited investors, and you have to actually vet them and make sure that they're legitimate and prove that. Thanks so much for watching. We'll put everything down in the show notes below. If you have any questions, don't hesitate to reach out. I'll put our Instagrams and Facebook links down in the description as well. We'd be happy to help any way possible. And on that note, happy investing.